Good afternoon, good morning, depending on where you're calling in from. Thanks for joining us today. We have an update with Banyan Gold. Banyan trades on the TSX-V under the ticker BYN and on the OTCQB under the ticker BYAGF. It's been a while since we've had an update. I think the last one was in September when we did our fire relief fundraiser. So looking forward to getting an update from Tara on some recent metallurgy results, as well as an updated resource that they put out, I believe it was last week. For anyone that's new to the story, it might be helpful to watch some of the previous webinars, because I think this is mostly just going to be an update and then a Q&A. And for those with questions, feel free to put them in the Q&A box at the bottom, and we'll get those addressed in the second half of the session. And as always, this presentation will contain forward-looking statements. You can find those on the presentation on Banyan's website, which clearly has been updated for today. So with that out of the way, I'd like to introduce Tara Christie, CEO, and Kai Woloshyn, VP Project Development. Thanks for joining us today.
Thank you very much. Really great to see so many people joined us today, and I'm sure there'll be people watching after. I'm going to go through the slides pretty quickly because a lot of you know the story, and I really want to get to hear what questions people have after we put our news release out last week, or our news releases. You're looking at our project site here. Really moderate, easy topography for building mines, not big mountains or lakes or rivers or, difficult topography, power line right through their road, cell phone service, and even fiber optic cable along the power line out to Victoria Gold. So, great attributes that, I know I say it over and over, and many of you hear the same presentations, but it is a really important part when you're looking at the operating costs as well as the capital costs to understand what the existing infrastructure is and how difficult it is going to be to operate in a jurisdiction. Victoria Gold's just down the road from us, 25 kilometers as the crow flies. Hecla's right beside us, and we have 173 square kilometers here. And this belt's really exciting, from Snowline off to the east to Sitka off to the west. We're making new discoveries, and our discovery was 2019. Other discoveries since then. Victoria Gold even has a new discovery with their Raven deposit, which is only 4.5 kilometers from us and higher grade at 1.7 grams and over a million ounces there already. Our property, you can see where the resource is here, and you can see all the existing infrastructure and roads on it. Now 5 kilometers of strike length. We've got it down to 2 deposits now. The Powerline, Aurex Hill was combined with Powerline, and Airstrip remains. And we haven't even drilled on Airstrip since 2019. We know it has room for growth along with Powerline. And in the 3D video here, you can see Airstrip dips underneath Powerline. Powerline are these horizontal sheeted veins, the same sheeted veins that you see in many of these intrusion-related deposits. Here's our 2023 resource in green, and then now I'm going to show the 0.6 cutoff. We use 0.3 in the resource, but here you're looking at where the 4 million ounces with a 0.6 cutoff would be. And then just at 0.9, if you read the sensitivity charts, that's 2.5 million ounces at 1.5 roughly. So, pretty short journey. This kind of tells the whole story from 2020, our first 900,000 ounce resource, to 2023, 6.2, and now in 2024, 7 million with lots of room for growth. But again, the next part of the story, we're working on what we'll do next and how we advance us in the context of this market. But with a strong treasury still this year, we know that we're going to continue to add value, and we can operate year round, which is different than most other Yukon stories. I'm not going to belabor this, but it's pretty exciting when you can draw a circle around you of 25 kilometers and already see 18 million gold equivalent ounces just between us and Victoria Gold and Hecla. That's pretty exciting, and it's getting to that district number where people say, hey, within that circle, you've already got a really substantial number of ounces. Our team continues to grow, and Kai, who's with us, and maybe Kai, you can just tell a little bit about yourself. As we move into project development, having Kai on the team, bringing that experience of permitting and building projects is really important. So over to you, Kai. You can say a few words to introduce yourself.
Yeah, good day, everyone. My name is Kai Woloshyn, and I'm the VP of Product Development, and I've been situated in the Yukon since 2006, really focused on exploration and mine development. Previously, I was with Alexico Resource Corp as the environmental manager that permitted both the Flame and Moth and Birmingham mines, which are now under Hecla's operations there. My focus is really on the metallurgy and advancing the engineering to support our project development. Thanks, Tara.
Thanks, Kai. And all that's going to be really important as we continue to add value here into 2024. As I said, strong treasury, seeing our resource growth there. We continue to have some really solid institutional shareholders, and our funding still is remaining from that last financing that we did back in 2022. Community side, and that's another part that Kai didn't really talk about, but he brings with him a wealth of experience and knowledge of all the participants in the community, which is really important. We're building our social license, we're doing work in the community, and having somebody who lives and really understands the community alongside me is super important. Of course, I've got a long history in the Yukon as well, but having a team that brings that experience is really important. Looking at the resource, you can see in this image, we've got room to expand to the east, we've got room to go south, even west, and of course, Airstrip we haven't drilled on. We know it continues to be open. Looking at the higher grade, and that's what I'm hearing a lot of people say, where's the higher grade? Do you have the higher grade in an area which can be your starter pick? And that's something that Kai and I are real focused on, looking at combining the engineering with the geology to really, how do we optimize project economics for the next phases as we move forward. And here, the purple and the red are the highest grade. You can see that's right on surface, right between where, Powerline kind of joins to what was formerly called Aurex Hill. And you can see the sensitivity chart, which was shown in the graphic video there, where are those ounces? And our job will be to really prove up that. The metallurgy, which, we've been working on really diligently for the last year, came back with some great positive results, showing 3 viable or potentially viable options with 90% recovery from very conventional CIP/CIL. That's the most common mining method in the world. Gravity and flotation at 84%. And again, both of those mill techniques we know we can continue to optimize by looking at grind size, looking at ways both to increase recovery, but also reduce power and operating costs. And then our heap leach recoveries have come in right around where lots of other heap leaches are at 64 to 72. And that's kind of where Victoria Gold was when they put out their first phase. We're working on additional work on that to optimize it. Environmental parameters were solid, non-acid generating or low generating, lots of buffering capacity and low reagent consumption. All of those things we'll continue to work on. Kai's been really in charge of leading the consultants on our next phase, and we'll probably get lots of questions about this, but we have a really solid program that's ongoing and planned for 2024. The permitting side and the baseline environmental is also where Kai and I both bring a tremendous amount of expertise. We have this huge database of data from the 2 mines beside us, in particular Alexico or now Hecla, where Kai's actually been involved since 2008 collecting that data, and I hired him as a consultant in 2021 to fill the gap. And we are really trying to position this project so people can look at it and say, not only is this a large resource, but it's something which can be permitted in a timeline which is desirable to the majors to actually get it into production and into their cash flow. 5th largest project, open pit in North America, according to Cormark's ranking. That's something to take notice of, something we've worked hard on. Our valuation at $8 to $11 per ounce, we're pretty undervalued, like many in the sector. But when things do re-rate, I think it'll be the ones which have solid projects and good jurisdictions that are permittable that will move first and hopefully highest. These comparable projects, really show you what other operating mines on the top, some of which have been 10, 20 years in production, have similar grades, similar process recoveries, and what processes they use, along with some development projects. And that's something we're happy to speak to if people want to really talk about details. The journey's been short from acquiring this property in 2017, and here we are in 2024, really building our team, setting our mind about what is the next phase and how do we take it to the next level. As a management team, we've always delivered on what we said we're going to do and used shareholders' dollars well. We certainly will continue to do that. focused on what we've always said. We've strategically positioning this project. There are not many projects like this with the scale of resource, the infrastructure that we have, the permittability, the baseline data, 2 mines beside us, operating mines, which will eventually want to grow or be acquired, because that's what happens in mining. Very few single asset producers persist. So, certainly we have optionality for our shareholders for how they're going to make money from the different potential outcomes, which we're making sure to set up. We can be year round if the market comes and we're able to turn on the gas and advance this really quickly. We can do that. We're taking a moderate approach and really trying to think about and plan for how we best spend our money to advance it. I'm expecting a great 2024. We know this deposit's open. We know people have been really excited with the metallurgy we've put out and have had lots of questions. We know that the resource has potential to grow. We're focusing on what we need to do to really move it forward. And meanwhile, the jurisdiction's getting lots of attention. There's lots of places in the world where it's difficult to work right now, difficult to permit. And when you've got a new jurisdiction where you're finding ounces, that makes it pretty exciting. So that's the story, Deb. We're ready for some questions.
Okay, awesome. Thanks for that update. I think my colleague Magda is going to start with some of the more technical questions.
Great.
So thank you, Tara and Kai. Just wanted to touch on some of the economics that set the latest resource and the project apart. You mentioned the cutoff grade. Can you kind of speak to the optionality there a little bit and how it provides flexibility, the flexibility for like mine sequencing and cash flows?
We're definitely looking at a variety of scoping level engineering right now. So we're evaluating the different grades. So within the news release that we issued for the updated resource, there's cutoff grades that range from 0.1, I believe, all the way up to 1 gram per ton. And so looking at those various cutoff grades, we're now able to evaluate and undertake sensitivity analysis and trade-offs using these different tables and using these different resource pit shells. So, it's something we're working through and using that in combination with the metallurgy work, right? So we've got the 3 optionalities between heap leach, the CIP, CIL, and the flotation circuit. So, the combination of the metallurgy optionality with the grade optionality really provides us a lot of flexibility and opportunity here to maximize value for our shareholders.
And we have an audience question next. With respect to your future drilling activity, how do you rank the importance of spend on conversion drilling versus further expansion drilling?
That's a question I'm getting lots from different shareholders. And right now we're doing lots of work to evaluate it. 2 years ago, when we raised the money in December 2022, our shareholders and the market was really like, get this bigger. We're hearing kind of both messages now. Grow it to show that, the capital of a mill would be paid back, that it has that potential, but also a lot of convert it. And that's really kind of different messages from people that want to see different timescales in terms of, get into permitting, get this project, it's big enough to start that versus the market's not quite there yet. So we're taking all that in and we're evaluating. We think there's probably a bit of a combination of both that's going to add the most value, but we just put out a resource and have those models that Kai was talking about. We're looking at the different engineering level mining pits and, where would you mine first in the different scenarios and understanding that. And so combining all of that and then putting together a plan where, we take everything into consideration. It's, probably within the next month and a half or 2 months, we'll have a bit better idea of which allocation that we're going to do. But we're certainly hearing that the infilling the higher grades, getting some indicated is an important factor for shareholders.
Excellent, thank you. And I wanted to ask about the strip ratio. Do you have a sense of what that would be based on like the information from the resource and how it might compare to some of the peers you've referred to?
Yeah, we definitely have, as part of our economic studies, we're looking at different cutoff grades and have different strip ratios. So it really depends on the cutoff grade. And so, we have, strong, low strip ratios at the base case that we've presented for our resource. So, that's a strip ratio around 1.5 to 1. And as we would, increase cutoff and increase the average grade, we're probably looking something closer to, a strip ratio of 3, at a cutoff, an average grade of about 0.8, 0.9 there. So, they're numbers that we're continuing to look at and understand, where is the optimal cutoff grade to maximize, strip ratios and other economic parameters.
Thank you.
And that's why we don't have a formal strip ratio on the deposit yet. It's still an inferred resource, and we still have quite a few options out there. And you can see even just from the section where the concentrations of higher grade are. So, once we have closer to a mine plan, we can give you an actual a strip ratio for the project.
Thank you. And then process options. You've mentioned 3. Are all 3 still on the table for further test work, or is there one that you really want to learn more about, or 2?
I'd say all 3 are actually still on the table, and combinations of them as well. There are projects like Fort Knox where they started with a mill and they have heap leach. There's also the option of doing a heap leach first and then having a mill. So we're evaluating the various options there, because you can't presuppose. It's really got to be the deposit and then the engineering with the metallurgy and the economics of that, which define what the project is. And then, of course, there's always the who's going to build it and how much capital they have, which comes into it, because there are varied capital costs for mills. And of course, the cost for a heap leach is generally lower, unless it's a small mill, than a mill. But there's all that needs to be factored in.
And then infrastructure. Can you tell us a little bit about the infrastructure available and how it might differentiate Banyan from some of the pre-production and operating peers?
Well, we have the roads right through the property, which are year-round maintained by the Yukon government. That's, really helpful. Not having to build roads to your property or maintain them reduces costs significantly. We already have a brand new power line, which was just reconstructed in January 2021. It's a 138 kilovolt capacity line, but it's only currently energized at 69, which is half of its capacity, and it serves 2 mines, Victoria Gold and Alexco. We also have cell phone service, even because we're between 2 communities. We actually get almost full cell service at our camps on the property. So that's pretty exceptional infrastructure. And when you're looking at capital costs, and when you look at what it costs Victoria Gold to put in their power line, to upgrade their roads, it was a really significant portion of their capital costs. So we're not looking at having, we can take all of that out and still look at what did it cost them to build and have an idea of what it's going to cost if this is a heap leach project.
Got it. And then you mentioned Airstrip versus Powerline. There's a large disparity in ounces, like 6.2 million at Powerline and only 845,000. Can you give us a sense of just the upside with so much of a difference in ounces?
Well, Powerline has just been so remarkable in that you can just step out 100 meters and drill another hole and intersect this very consistent mineralization, these sheeted veins. And, when we made the discovery in 2019, and this area has no outcrop. You couldn't tell there's a deposit there. The soil anomaly, there's a bit of one, but it's pretty covered with overburden that doesn't really give you much of a geochemical signature there. It's kind of a swampy area, and there's some glacial influence. So we really were exploring by drilling. And when you're stepping out 100-meter step outs and adding ounces, you're adding ounces very quickly. If you look at our overall record, because of Powerline's growth, we've added 58 ounces per meter that we've drilled. So yeah, we haven't got back to Airstrip, and we look at it now and go 0.75. It's actually kind of higher grade. And we think it's likely a little bit more amenable to milling. So that was the other thought, is when everybody was looking at us as a heap leach project, we're like, well, let's focus on where we think we might get better heap leach recovery. But we do have to start to look at Airstrip again. It might be more limited because it's constrained within a specific lithological unit that's roughly 90 to 110 meters thick and dips down underneath Powerline. And we actually do know, because we have drilled one hole all the way through Powerline to intersect airstrip beneath it. So there's room for it to grow, certainly. And some of that deep mineralization would be what some of the larger companies would look at. It would never make it into your NPV for the project. But when you're looking, is this a generational investment, which it might run for a longer time period, people think, well, how deep does it go? And you look at places like Marigold, which is, already 600 meters deep and certainly still in mineralization.
Awesome, thank you. And just to touch on the metallurgy again, the results from last week were phase 1. How many phases is it typical to go through, and how much of a delta is possible from what you've released lately?
Well, I'm going to give my answer, and then I'm going to turn it over to Kai. But I think you do metallurgy until the day you build a project. And then once you've built a project, then you do metallurgy to make sure that you're actually getting the results that you have until for the life of your project. We chose to make it into kind of, here's our first phase, which covered all 3 processes. I think we'll probably be a little bit more sequential. And we're doing work largely in series rather than parallel, so that we can, efficiently spend money, given we have 3 processes or that are potential. And then you can learn from your results and do the next activity. And, people approach it different ways. Some people like to do everything all together all at once. And especially if you've got a big budget for it, that's possible. But, in terms of optimization, and I'm going to let Kai speak to this a little bit more, but I think we can optimize all 3 of the processes. And maybe, Kai, you could just tell a little bit about some of the things that we're doing to optimize each of the different processes.
Yeah, sure. So we definitely have upside, in all 3 processes. And so we're going to first evaluate, different crush size or grind sizes for each of these, processes. And so, each associated grind size or crush size has, an associated energy consumption. So, it's always going to be a trade-off between recovery and energy consumption. But generally, yeah, we feel like there's a lot of upside in not only the CIP, CIL and flotation, but also still in heap leach. There's we're starting to better understand the different confounding factors and the recoveries, and with that additional knowledge, yeah, we can definitely optimize these flow sheets and overall recoveries in all of them.
And how do the 3 options kind of rank in terms of CapEx? Is there one that's definitely lower, and then, or how are they positioned relatively?
Yeah, from a CapEx perspective, heap leach is the lowest. That would then be followed by the flotation circuit. So the flotation circuit would have lower capital because it would require less tanks for leaching the concentrate. So, we've noted about a 4% mass pull. So, a significant lower proportion of material that would need cyanidation, which would result in lower CapEx and OpEx in the long term.
Thank you. And last question on metallurgy. How would permitting and construction timelines, or would they be impacted by the choice of process route?
Yeah, I think going back to your, first the question about, infrastructure, I think really having all the infrastructure in place that we have really sets us apart. Providing access to a site is usually adds a significant amount of time, but, these 3 processes that we've talked about are well understood in the Yukon. And as Tara highlighted earlier in the presentation, there's a heap leach facility, at Victoria Gold, and there's a mill, which I permitted at, Hecla. So, it's all technology that's well understood. Heap leach facilities, tailings, they're all technologies that are similar. So I don't think there's really any advantage or disadvantage from a permitting perspective for any of the 3 options that we have right now.
Thank you. And then touching on the resource, can you give us a bit of a sense of upside on strike versus at depth? Like, do you have an estimate of the depth of the current resource pit shells and where you see most of the potential for growth?
So, some of the engineering work that we've done, and because now that we have this 5-kilometer strike length, there is potential to take it deeper than we currently have it, particularly where there's high grade at the bottom of the pit or near the bottom. Previously, and this resource with the deepest part of the pit is 200 meters, and in some places it's not even that deep, because that's kind of, as a rule of thumb, your economic depth for an open pit at this kind of grade. So definitely with the resource having some depth to it, and now that it's at this scale, it becomes potentially more economic to look at some of that beneath it. But yeah, still east and west and south, and we even think you could connect Powerline to where the surface expression of Airstrip is. Room for Airstrip to go east and west, and certainly even further to the west. We really haven't explored it out in that direction. And you can see the holes where we did intersect mineralization out to the east. There's a huge gap that's undrilled between the resource and that. So lots of areas where, we expect we'd be able to connect it. And then beyond that, you just have to continue to do exploration to see it. But I can see this has got the potential to be 8 million ounces and above that in a pretty short order. Remember, we added this last 800,000 ounces with 25,000 meters of drilling. So, pretty good success record in adding ounces.
Definitely. So speaking kind of to that, do you have a sense of how much drilling, you have this inferred resource, which is quite large. Do you have a sense of how much drilling would be required to upgrade to either the measured or the indicated for engineering studies and whatnot?
So that was actually something that came out of this year, and getting your QP to look at the geostats to tell you about the spacing that we need, and that of course will tell us how many meters of drilling. And we've done that analysis to determine how much we'd need to convert various numbers of ounces. So it's not a huge amount. We think we'd get at least your first 2 to 5 years of mining drilled off to indicated with about another 30,000 meters of drilling. So that actually is, compared to many projects, because this is so consistent and we've already got a pretty consistent grid in here, that's actually a fairly economical drill out indicated compared to some more complex projects.
Excellent. Thank you, Tara and Kai. And I know Deborah has some more questions for you as well.
Yeah, sure. Just talking about next steps and permitting. In terms of baseline data, how much additional information is required for the permitting process?
Sure, yeah. So the permitting process in the Yukon now has a pre-submission engagement process. So to enter into the permitting process, we currently have all the baseline information we would need to enter that process. And, as Tara highlighted, there's been significant amount of studies that have been done, especially by Alexco Resource Corp, since 2008, to get that district into production and to maintain that their water license and their quartz mine license. So, we have years of water quality information and wildlife and vegetation work there that is available. So, once you're in the process, there's a number of site-specific studies that are required. So those are studies that we're contemplating to start actually this year and or potentially next year. But it's I would say right now we could enter the permitting process once we have an engineered project.
And what level of engineering study is required for permitting?
Sure. Yeah, at this stage, a PEA is only required to enter the permitting process, and as we advance that through the permitting process, we would need to advance it to a PFS level, and depending on how we want to advance the project, we could go to FS, but it's not required based on the Yukon guidance right now.
Okay, and then moving on to some corporate questions. I actually have one from the audience. Has any thought been given to the spin out of a royalty on the project to the shareholders?
Yeah, I think it's a little bit too early for that until we figure out what the project is. I know that was popular and was successful for Great Bear. So, we've certainly looked at that model. But in this market, some of the most recent royalties that have spun out haven't been overly successful from how much value did they generate for the shareholders versus how much cash are you now spending with two public companies? So, timing's everything on that. And I think in a different gold market, we could look at things like that again. But again, you need to know what the economics are and what the project is before you talk about any more royalties on a project. And even when people talk about selling a royalty, which people, are you going to fund it by selling a royalty? And I'm like, well, we need to understand the economics of the project because you need to make sure you don't constrain the project. There's been companies that have made those mistakes before. So we're being patient, but certainly, we'll look at those options when they become something that we think is going to generate value.
Makes sense to me. And then trading valuations. Based on the latest resource, it looks like Banyan's trading on the low end compared to other pre-production peers. I think I saw in one of the notes it was $11 an ounce EV to market cap. Why do you think this is, and how could this gap be closed?
Well, I think a little bit of it is just the total market sentiment and when people put out the resource, people that put out their resource and some of those projects that are in this pre-development stage, a lot of them are sort of trading in the range of $33 to $70 per ounce. But a lot of those studies were out maybe before this real market downturn. So that's one explanation. And we just put our new resource out. We just put the metallurgy out. It does take some time to get around and talk to people about, and particularly the institutions and the corporates, which are probably the ones that are going to help close that gap with their interest in the project and belief that it's going to move forward. So give us some time on that, and certainly a little bit of love from the gold price and interest rate cuts certainly wouldn't hurt. And a little bit of attention from the retail sector as well, which is tough for any junior right now. There is not a lot of retail interest in gold companies, so I think it gives us a lot more opportunity to re-rate, given that where we're at, as we see that the gold prices continue to stay above 2,000, and people maybe get a bit more interest as interest rates kind of come off.
And what are the key attributes that you think set Banyan apart from its peers?
Scale of resource, infrastructure, safe jurisdiction, permittable jurisdiction. Having projects in some jurisdictions right now would not let me sleep at night. Having a great team, knowing that we really are very focused throughout the whole company on spending our shareholders' dollar well, advancing it. Those are all things that I think really set us apart. And we've delivered on what we said we were going to do time and time again.
Just talking about jurisdiction, can you remind us of the two adjacent mines operating near Banyan?
Sure. Victoria Gold, which is a heap leach mine, and then Hecla's Keno Hill Silver mine, which is a mill.
And then in addition to AurMac, the site of the resource, Banyan holds two additional projects in the Yukon. How far are Hyland and Nitra from AurMac?
So the closest to AurMac is our Nitra property. And, it's about a 45-minute drive into the heart of the Nitra, where we're doing most of our exploration from AurMac. If you look at the property, there's about 1.5 kilometer gap between it. It's west of AurMac, and between the two properties we have 300 square kilometers, and that's all this tombstone intrusive suite. We know that there are some known intrusives on the Nitra property, and they're in our larger presentation, which is on our website. There's some maps that show that, including one intrusion that's kind of surrounded by our claims that has known gold mineralization in it. So not very much modern exploration has been done there, and certainly it's green fields to us, but lots of potential there, we think, to discover another AurMac, and long history of alluvial or placer mining out there. Hyland is actually quite a bit to the south and the east, down near Watson Lake in the Yukon, closer to the BC border. And we already have 500,000 ounces there. And it's also a potential heap leach project. It has 85% recoveries from column tests on the oxide. it's also pretty similar. It's a sediment-bound deposit that and structurally controlled deposit as well. But market doesn't really care about when you're working on two projects right now. So, we're planning to stay focused, and we're adding so much value for dollar at AurMac that, we've got these other two projects, which we think have lots of potential, but we don't have a lot of holding costs on them. So, we think the best strategy is to stay focused and wait till the market might appreciate them.
Do you have any programs planned on them this year?
Hyland will probably do a small program on it. We did some soils out there last year, and we have 186 square kilometers there. And yes, we have the one main zone where the resource is, but there's a few other targets. And so that grassroots exploration often takes multiple iterations, and so I think it would serve everybody well to do a little bit of work out there to continue to understand those other exploration targets on the property, specifically, the Cuz and the Montrose Ridge, where we have some gold anomalies, so that you're actually ready to drill when the market changes or if somebody expresses an interest in it.
Yeah, that was going to be my next question. Would you look to keep these assets in the company, or would you sell them at fair value if you could get it? What are your plans?
We're not under a lot of pressure because they don't cost us a lot. So we're not going to give them away. But certainly, a few years ago, I would have said, oh yeah, we'll sell Hyland to if somebody would give us a fair value to advance AurMac, because, putting more money into AurMac and advancing it quicker would be greater value for our shareholders. But, it's really going to depend on who takes it or who wants it, and what they're willing to pay and kind of offer. Nitra goes quite well with AurMac and shows that you have a district, particularly if you're building a mill. Having another discovery that's a short distance away could add a lot of value.
Makes sense. That's it for the questions I had. I don't know if there's anything you wanted to talk about today that we didn't cover.
No, we're going to be out talking to people. If people want additional information, check out our website, look at the 3D models that we have. Come and talk to us at the various trade shows, or reach out by email. We are pretty excited about 2024 and digging into the exploration options that we have and understanding what the metallurgy means from a mining perspective and engineering perspective. And we've heard a lot of really interesting feedback from lots of the miners that have built mines and projects before, which is really helpful. And we're hoping that 2024 brings some higher gold prices and some love for the sector, but we've got a pretty clear vision for what we're going to do, and so I'll encourage people to stay tuned.
Awesome. Well, thanks for the update. Appreciate that. If anyone has any follow-up questions or would like a one-on-one meeting, please feel free to reach out to us or Banyan, so we can get that arranged for you. And thanks to the audience for your questions and your time today. And thanks, Tara and Kai, for walking us through it. And hope everyone has a good afternoon.